next week. You'll be missing it, John, and we'll miss you. Meanwhile, what we're looking at today, as both of you were talking about it today, the deadline is at midnight for a U.S. funding agreement to prevent that government shutdown. A real question, Tom, you were mentioning Representative Thune talking about the potential damage if we don't get a deal, even if it's only over the weekend. Again, the stalemate, what is a deadline? We'll talk all these existential questions, I'm sure, into next week, even without you, John. Meanwhile, 10 a.m., we'll look for some indication of how the economy is doing. November's economic indicators, the leading index from the Conference Board coming out. It has been trending lower. Again, each data point not necessarily market moving in its own right, but giving a feeling of the direction and possibly, maybe given the environment this week, giving a little more impetus to those down in Washington, D.C. on the Beltway to get something done and get it done more quickly. And then at 4:30 p.m., the Fed will be releasing the bank stress test results. I'm going to be looking for any signs that they're going to be loosening up on some of the restrictions for bank dividends and buybacks, this idea that possibly this could circulate more money into bank shares, but really perhaps also an indication of the economy given all of the loans on the books of these banks. John?
Are you seriously going to be online at 4:30 p.m.?
Yeah, actually, I'm going to be on radio.
Really?
So yes, absolutely, I will. And I'll be watching
every
single bank stress test. Yes, that's correct. My little plug for the real stress tests later on.
I look forward to the special. We all do. On Bloomberg Radio and on TV. Let's get to the price action this Friday morning. I think this is the final Friday trading day of 2020. There we go.
I did not
in the
know
equity
that.
market,
Yes.
we're up 4 or 5 points on the S&P. Up a little more than 1/10%, Tom. Adding to the gains, more record highs. The small caps, Tom, it's unreal.
Yeah.
7 straight weeks of gains. Big cap tech up about 3% on the NASDAQ, but small caps, the Russell, Tom, up 3.5% on the week as well.
All of us have a stock, John, which we held flat for years, and then one day, boom. That's what small caps are doing right now. Just boom. And boy, does that readjust. Does that readjust total returns for people in some kind of diversified portfolios?
What a couple of months it's been. Julian Emanuel joining us now, BTIG Chief Equity and Derivative Strategist. Julian, let's just start with a line from your research, sir. US stocks are more dependent than ever on two things that over the last decade have been less than reliable. Bipartisan fiscal support, 1. Public inflows, 2. You're a little bit cautious here, Julian.
Look, we have run a long way. And if I had told you a year ago that we would be where we are now, given the economic backdrop, given the public health crisis that is directly in front of us, it would have been very difficult to believe. And there's no denying it. You can sort of put it in terms of interest rates at 0, but we are at all-time high valuations. And to us, that's a sign that we want to be at least balanced in the near term.
I look, Julian, at the balanced and all that, and it also is about sector choice, and I don't mean sectors like cyclicals and that. I'm talking about broad global analysis. What do you look at when you look at international, small, mid-cap, other true sectors that really can diversify away from what's worked this year?
Well, 2020 is going to be, in our view, a watershed year, obviously, for a number of reasons. But what you've had is really 14 years of an investment paradigm, U.S. growth over everything else. And when we think about 2021, the only conclusion that we can come up with is that, large cap tech, FANG, is no longer the only game in town. And this push for diversification, because our expectation is that we're going to have global synchronized growth next year, is going to lead, in our view, to outperformance in all the places that have been, really shunned by investors for the most part: international equities, value, and again, an area like small caps.
Julian, this is the tension right now. Everybody says that those areas that have been less loved will be the beneficiaries next year. And then an increasing number of people are coming on the show and saying it's gone a little hot recently and we're pricing in a little too much. So what exactly are we pricing in right now with respect to a recovery next year and with respect to some sort of financial stimulus from Washington, D.C.?
Well, we're certainly pricing in that politicians are going to get a deal done by Christmas. If you don't have that, That is, assumption number one coming into the new year that needs to be revised downward. And then, frankly, we're pricing in what President-elect Biden is talking about, is that a deal that we get over the next week is going to be a down payment on a further deal. So there is a lot, call it north of $2 trillion in aggregate that we're thinking about pricing in. And in that respect, once again, even though the S&P 500 is relatively the most expensive index out there, the fact that you've had the degree of catch-up that we've had in small caps, in value, it gives us, more pause to be more selective at this point, because the market is not primed for any sort of negative news.
I asked the question earlier this week, what would actually lead to lower equity markets? And Julian, the individual I asked the question to, struggled to answer it, because I think many people struggle to answer that question through much of this year. We've come up with these neat little narratives to fit the price action on any given day over the last couple of months, Julian, and those narratives have swung from one extreme to another, particularly in and around the election. Can you walk me through what's happening in the options market, the degree to which you think that is driving equities and the equity market more broadly, and whether you think there is a fundamental story behind it?
The fundamental story is that, again, 2020 is the year that a younger generation of investors who've been chronically underinvested in equities discovered stocks, and more so discovered options, and more so discovered options that expire in 2 weeks or less. And the activity has been absolutely frenzied. To think that the day before Thanksgiving could be among the highest option volume days of the year is absolutely preposterous by anything that we as professional investors have seen for the last 20 plus years. And yet still, that's what you had, because the public really is, to a greater degree, and we would say really more so than at the peak in 2000, is the marginal price setter in the equity markets right now, and the marginal price setter in the options markets right now. So we are very dependent on the continuation of public flows, very much the way you saw after election 2016. 2017 was really the only year in this cycle where you had consistent inflows. We do believe that's possible, but you're going to need it in order to keep stocks moving higher.
You wonder how reopening changes that story. Julian, thank you so much for everything through 2020. Just wonderful. Send our best to the family, won't you? Julian Emmanuel there of BTIG, the Chief Equity and Derivative Strategist. Tom, that's been the story for 2020, the public participation in this market at the lows of the market when everyone got sent home in and around the end of March.
The gloom coming out of March is there, and there's regression of the mean, but the new leg up from November, the election leg, let's call it, John, for lack of a better phrase, is really, I think, caught people unawares. And to me, again, I go back to where Gina Martin Adams is okay, great. What about revenues? What about margins, et cetera? And the consensus I see from people is, corporations are going to deliver.
Clearing the election risk was one thing, Tom. I think the vaccine news in and around the start of November was just critical. Yes. And it allowed people to de-emphasize the near-term risks and the data that we're living through right now in both the economy and the pandemic, and really focus on the hopes and dreams at the back end of 21, Tom. And right now, that's where this market is. Back end of 21.
I looked at the data today. Of course, the headlines here are out of Los Angeles and how grim it is out there. But the vector of deaths in America, John, is absolutely unprecedented, way out over where it was in April and May.
Did you see the numbers from Axios? One of every 200 Americans diagnosed with COVID last week.
Yeah.
Last week. The numbers are crazy. From New York and London this morning, good morning. For our audience worldwide, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The US is on the verge of having a second coronavirus vaccine approved. A panel of outside experts who advise regulators have given its okay to a vaccine made by Moderna. The Food and Drug Administration could authorize the shot today. The vaccine showed the high rate of effectiveness in late-stage trials. The U.S. government faces the prospect of a partial weekend shutdown. That's according to the Senate number 2 Republican, John Thune. Top leaders in both parties are working to complete a coronavirus relief deal that's tied to a giant government spending measure. Thune says some senators opposed to parts of the relief bill may not go along with another funding extension, which could lead to a shutdown. And the U.S. is set to blacklist dozens of Chinese companies, and one of them is the country's top chip maker, Semiconductor Manufacturer International. That's according to Commerce Secretary Wilbur Ross, who spoke to Fox News. The blacklist prevents the Chinese companies from buying U.S. technology. And the UK's chief negotiator warns that time is running out to reach a trade agreement with the European Union. And British Prime Minister Boris Johnson says talks will fail unless the EU backs off its stand on fishing rights. Behind the scenes, though, officials say the talks are progressing and negative language can be just a negotiating ploy. FedEx has failed to keep up with Wall Street's soaring expectations. A jump in costs hurt profit margins in the fiscal second quarter, and it spurred doubts about how much FedEx will cash in from record package deliveries. Shares are lower pre-market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
And a bipartisan, bicameral agreement appears to be close at hand. The outline that I've been discussing with Democratic leader Speaker Pelosi and Leader McCarthy would get another huge dose of bipartisan support out the door as fast as possible. We've yet to nail down every detail.
Mitch McConnell, Senate Majority Leader and Republican from Kentucky, for our audience worldwide this morning. Good morning. It's the missing piece of a bullish puzzle down in Washington, D.C. and for this market. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action in your equity market, adding to the record highs in yesterday's session. Equity futures with a little bit of a lift on the S&P 500, up 4, positive a tenth of 1%. In the bond market, yields unchanged, just calm, despite the fact that we might be shutting down the government temporarily going into the weekend. 0.9346% is your yield on a 10-year, unchanged. Senator Lee, Tom Keene, a Republican senator, saying he was told we must be in D.C. this weekend for funding talks.
Now, the gentleman from Utah there driving the story forward, and what's so important, folks, is from that video, and Good Morning on Bloomberg Radio as well, you heard the senator from Kentucky, and the story has migrated from there. To catch up, Kevin Cirilli joins us, our chief Washington correspondent. Kevin, I read the papers carefully this morning, and what I see is a lot of distrust, a massive theoretical debate over the role of the federal government in crisis and outside crisis. How do you get from this distrust and this debate over to compromise? How do you do that?
Well, it's happening in real time. And in fact, I mean, Senator Mike Lee, the Republican from Utah, saying that the lawmakers are going to have to be here this weekend matches with what they have been told really all week. And some of the sticking points now, and I was hesitant to use this phraseology earlier in the week, but I'll use it now. They're dotting their I's and crossing their T's. And it's just taken them a little bit longer than they had anticipated. They originally wanted to get this done by today to avoid even a short-term partial government shutdown. But by no means is either side, Democrats or Republicans, forecasting that this is going to be a long-term government shutdown. This is just to buy them some time to finish this. One of the sticking points is the $300 billion that we saw play out with Fed Chairman Jay Powell and Secretary Mnuchin, and how that's going to be utilized. Senator Pat Toomey, Republican of Pennsylvania, at the forefront of that debate.
Yeah, well said. You know, I look at FEMA. We're going to use FEMA as a backdoor funding for state and local, whatever the story is. Does the president play into this debate at all, or is he missing in action because he's lame duck?
He's not playing into this debate at all. I wouldn't say that he's missing in action simply because they've taken up the issue with Georgia as to be his final assignment, so to speak, between now and January 21st.
Kevin, I'd love to sit on the policy talk for a while because there's so much to discuss, but we're pushed for time. And top of the news flow again down in Washington is the hacking of the federal government, and not just that, but also large U.S. multinational companies as well. Kevin, by the day, this seems to be getting a little bit more serious. What's your take on things at the moment?
Three things. First and foremost, the president has received a briefing on the cyber attacking hackings. We have not heard from him directly with regards to a public comment. Secondly, President-elect Joe Biden coming out with a statement saying that cybersecurity will be front and center of his administration, and that those who were doing this will be held responsible. Thirdly, on Capitol Hill, this is a much broader issue that dates back more than nearly a decade ago to the Target data breach, in which you have the private sector experiencing reputational headline risk anytime they report a hacking, and the government sector really largely being able to avoid that. What we're seeing unfold now with the public and the private sphere experiencing cyber hacking is that this can happen to anyone. And so yesterday, I spoke with one lawmaker, Alyssa Slotkin, who is a Democrat from Michigan, and what she told me was the conversations from the policymakers are that they need the G7 or some organization of that caliber to have teeth in order to respond to whomever hacks in these situations, because right now there is no organization where the U.S. can respond with teeth when this unfortunately occurs.
Okay, well, is there any talk about what the U.S.'s response will be toward Russia?
Right now, the senators on Capitol Hill are pressing for there to be intelligence briefings on this matter. There have been some briefings on cybersecurity, and to be quite frank with you, President-elect Biden's statement is the most that we have seen coming from a period of transition. The timing of this hack, at a time in which lawmakers in Washington were so hesitant about the election, for this to happen in a period of transition clearly is sending some type of message. Now, America is going to, we'll see what that response will be.
Kevin, from Trump to Biden, both looking at Putin, do you expect some drama in literally the opening days of the Biden government?
I think we're already seeing that drama unfold. And if it wasn't just with Russia, I would expand it to Huawei and China. I mean, you look at German Chancellor Angela Merkel and what the Germans have done in opening the door to Huawei and 5G technology. Clearly, this is a reset of sorts on the geopolitical stage. And there's some tests that Anthony Blinken, who President-elect Biden has nominated for Secretary of State, that he is going to have to immediately take on in the first few days in office.
Kevin, I've got one final question, and it is so important. I was stunned and deeply moved by the idea that a Pueblo Indian with centuries of heritage of New Mexico out west of Albuquerque would be selected as Secretary of Interior. Did that surprise you? I was just flabbergasted to see Ms. Holland selected.
Well, Deb Haaland, who is one of 2 Native Americans elected into Congress, representing the beautiful Albuquerque, New Mexico, representing also the Laguna Pueblo Native Americans, now has, with her nomination prospects, the opportunity to really highlight and spotlight the issues pertaining to Native Americans. She also will find herself facing questions as it relates to environmentalists. She is going to be, along with John Kerry, one of the key focal points in the administration as it relates to climate change and the national parks. And the importance of that from an energy sector perspective will be unpackaged during her confirmation process on her specific policy stance as it relates to the energy sector. But a historic moment with regards to what she represents in terms of this nomination.
Kevin, great to catch up. We appreciate your time, sir. As always, Kevin Cerulli, Bloomberg Chief Washington correspondent. And Tom, on that final point, I think for many people that was more than just a nod to history. That was about looking forward and what policy might look like under this administration.
Absolutely, but just the moment of it for the nation, going back to the formation just before the Civil War of, our homeland effort, John, our Department of Interior, just absolutely extraordinary to see. But I do take your point. Those hearings will be fascinating to see how progressive the Congresswoman from New Mexico is.
2 hours away from the opening bout this morning. Good morning to you all. Record highs on the S&P 500, and we are set to add some weight to them. From New York and London this morning, good morning. This is Bloomberg Surveillance.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Listeners on radio will miss this mess. Tom Keane insists that I do the whole market check, just leaning against the plasma.
It's just wonderful.
Do you like this,
casual.
Tom?
It's just
Does
great.
this work?
It works.
What, for the whole thing? You want to do the whole thing?
Do the whole thing.
Just leaning against it.
Well, you
Just
lean,
leaning against it.
and Tom does
Don't
the
move.
market check.
I love it, John.
I'll lean and Tom does the market check. Tom,
we got green
there's
on
the
the
equity
screen.
market.
John, look at the VIX. I mean,
Oh
come
my
on, do your
God.
market check. Get to the bonds so
Good
you can
Lord.
get briefed for the real yield this afternoon.
I'll run through things.
Please.
Equity markets all-time highs on the S&P 500, the Russell, and the Nasdaq. We had some weight to it, up 0.1% on the S&P, up 0.1 on the Nasdaq, up 0.2 on the Russell. The Russell, the small caps, 7 straight weeks of gains. Just unreal performance over the last couple of months. Pick your poison for 2021.
I'm trying to
Switch
pick
up the
my
boarding to the
entry
bond
point.
market. What a year it's been in the bond market, Tom, on 10s and 2s. We started the year on 2s at about 160. We're down to 12 basis points. We started the year, ended 2019, on 10s at about 192. Right now, about 100 basis points south of that at 0.9346%. That curve a little bit steeper in the last month or so off the back of this rotation into the cyclicals. We'll talk about that a little bit more with Neil Dutter of Renaissance Macro in just a moment. I want to finish on this. Euro dollar intraday. 122.62. What's interesting about this, Tom, is the year-end median target in FX land on euro dollar is only a little bit north of where we are right now, 123.45. The highest forecast that I've seen, the highest target, UniCredit, out to 128. We're almost there, Tom. 122.61. Real euro strength coming through this market in the last couple of days. Real dollar weakness, highs for 2020. But for everyone, Tom, talking about dollar weakness through 2021, I haven't seen the targets in this currency pair to back it up.
And for those of you starting late on a Friday like John Farrell, Rebecca Patterson was mesmerizing this morning with Bridgewater. She was heated that they will step in earlier this time around. We heard the same thing from Jim O'Neill as well with Chatham House about how nations will respond to a weaker dollar. Look for that to be a real theme for surveillance in our first quarter if Lisa, John, and I get back together in 2021. Right now, Neil Dutter with us, Renaissance Macro, head of economics. Neil, I love what you say about runaway inflation, the parsing of good inflation, bad inflation, and runaway inflation. What is the character of our inflation forward?
Well, I think inflation is going to be benign next year. I mean, certainly people are sort of amped up for higher inflation, planning those summer vacations after they get the vaccine. But, outside of a few pockets of price pressure in, travel, tourism, related sectors, it's really hard for me to see a meaningful inflation pickup next year beyond those sort of industries. You know, you look at sticky prices, Tom. I mean, that's prices that move slowly, things like rents. They've actually collapsed this year, and those prices tend to move quite slowly. At the same time, most of the upside surprise in inflation in the U.S. This year has been in goods, cars, appliances, furniture. And I think a lot of that is just a function of the pandemic. I mean, people kept buying stuff, but factories were shut down. So you had a depletion of inventories. As inventories normalize, prices for goods should moderate. And so, I think, go ahead.
Well, no, but Neil, I think this is so important, is that the great call for early in the year is to service sector inflation revert to the mean of, say, 3%-ish, or does service sector inflation stay subdued in this great disinflation?
I think it'll stay subdued because these are prices that don't move slow. I mean, you don't have, a services inflation rising rapidly. It's a process. I mean, outside of commodities, inflation has always been a process. And remember, next year you're going to have the most significant positive supply shock in the labor market like ever, because schools are reopening and people can go back to work.
Yeah.
And that positive supply shock in the labor market is disinflationary. It'll also mean there'll be more jobs created relative to what we've seen, I think, in the last month or so. But you have to think about this a little holistically. And of course, I mean, we know that one of the reasons why inflation is up is healthcare inflation. And we know the government's been making payments to hospitals, for COVID-related care. God willing, that's not going to be as much of an issue next year as it has been this year.
So, Neil, you've been really good throughout the year at being more optimistic, and rightly so, than the consensus about the economic recovery. Right now, it seems like other people have brought forward their optimism. Your call for suppressed inflation is not a negative. Rather, it gives the market more room to run, given the concerns that some people have about inflation being higher. Where do you think people are, the consensus in terms of economic growth next year? Are they overshooting or are they undershooting right now?
I mean, I think they're undershooting. I mean, first of all, if you look at the latest data, I think from Bloomberg and Blue Chip, I mean, it's around 4%, maybe a little bit higher, but to me, that's just ludicrously low. You have a lot of growth in the pipeline as it is. I mean, you saw the housing data yesterday. Building permits are at cycle highs. So there's a lot of construction activity in the pipeline. We've had new homes sold, not yet started, up over 90%. I mentioned inventories. You talked about the dollar earlier in the show. Well, the dollar's weakening. What does that mean? It means stronger export activity. And, of course, there's still a large pool of available savings for people to draw down, which I think they will, on these sort of conspicuous areas of consumption, dining out, travel. We know the distribution of savings tends to skew towards the higher end, but, remember, the high end is, that's what they do. So I think as the savings comes down, that's going to drive stronger consumer spending in household services. So, to me, the risks are skewed to the upside. And I do think that, as cases come down, which they will early next year, activity will resume. The bears don't have much of a story to tell than there are economic lockdowns, and that may hurt the economy for the next, couple of weeks. As an investor, you can't do anything with that.
Neil, they've got a new story. Let me tell it to you. Let me say it right now. So you identified rightly earlier this week that the forecast will be higher and that policy will remain the same. And that was the change over at the Fed. And you called that passive easing. A lot of people are trying to wonder whether that holds up in the middle of next year when the data, as you describe it, starts to perform and inflation starts to tick higher. Will the Fed come back in? How do you think their guidance holds up in the middle of next year, Neil?
Jerome Powell was one of the people that pushed Bernanke to make the mistake of, what we now call the taper tantrum of 2013. I think he's learned his lesson. And, my sense is they're going to continue to buy asset purchases. We're not going to really know I mean, we're not going to be able to test the Fed's framework, the new framework, really until macroeconomic, and this is my view, until macroeconomic conditions kind of resemble what they did in late 2019, right? Or February of this year. I mean, basically pre-pandemic. And we're still some way for that. And of course, you have to hold that for a period of time as well before they really start thinking about it. So, you know, I think I'm of the view the Fed means what it says. I mean, certainly there are people in the markets that don't. I mean, if you ask around, if you look at, you know, dealer surveys, I mean, there are people that think the Fed may go in 2022. I just think that these are sort of, you know, I would tend to fade that, which is why I think the front end of the yield curve will be anchored. Not only because inflation is going to be benign, but also because I think the Fed's going to reinforce their accommodative posture over the next number of quarters.
Neil, great to catch up, sir, and truly wonderful call earlier this year. Neil Dutter of Renaissance Macro, head of economics. Tom, we all remember the moment. It was the morning of payrolls, that negative 20 million number that nobody can forget. And Neil came out and said, sure, this will be the worst we'll get. That was obvious at the time. But his call was really important, that we would snap back quickly, much, much faster than people anticipated. And Tom, well, we did.
We see that. Let's run it forward here. Since we're all going to be on vacation up, down, and sideways, it would be nice to stagger out to January 8th early. We do that with the only one who's looking at January 8th, Michael McKee. I looked at the ECO screen, Michael, and it's real simple. There's really minimal surveys in there right now. Average non-farm payrolls pre-crisis, I'm going to call it conveniently 200,000 per month. How far beneath that are we now, Michael, looking out into Q1 of next year?
Well, we're still above it, Tom, but not going to be a whole lot above it, at least in the month of December. The feeling is we're going to have a very bad month here because we've seen really bad numbers in terms of the jobless claims and in terms of the regional Fed surveys have shown hiring has sort of dried up. We also didn't get as much holiday hiring as we have in the past, although it's a little hard to parse out because they're hiring more truck drivers and delivery people than they are in the retail stores. So the feeling is this is going to be a bad month. Now, I think the January payrolls that we get in February are going to be an open question because it's really going to depend on, to go back to what Jay Powell and everybody likes to say, the progress of the virus. If the virus starts to go away again, then we will see more hiring. Restaurants will reopen. If not, it's going to be a cold winter.
Mike, yesterday when we got the initial jobless claims, rightly so, Tom was mentioning nearly 900,000, much higher than the expected estimate, and yet people shrugged this off. Messy numbers, maybe giving more incentive down to those in Washington, D.C. to pass something. When does this become truly bad news? When is it significant to you?
To economists, it's significant now, and it is bad news right now because that's a lot of people who are out of jobs. Maybe you can't completely trust the idea that it was 885,000 during the week, but you can trust the idea that a significant number of people did lose their jobs in the last couple of weeks, and that's bad for the economy, not just, I mean, obviously terrible for the individuals, but bad for the economy because it is less spending power. And I think Wall Street is looking past that to middle of next year when hopefully most people are vaccinated and we can get back to normal. But between now and then is when Jay Powell is talking about the fact that we need a bridge because those people are out of work. They're not going to be spending money. The economy is going to be in much tougher shape.
Michael McKee, great to catch up, sir. Thank you. Just want to bring you some news. It comes from the President of the United States. He says the Moderna vaccine has been overwhelmingly approved. The vaccine distribution is to start immediately. There is a process to all of this, Tom. What we learned yesterday from the advisory board to the FDA is that they had given it the nod, as we've seen this happen with Pfizer. And then the next step here is to wait for the emergency use authorization from the FDA itself. And that's what we were waiting for. Unclear at the moment as the president comments on this being overwhelmingly approved as to whether he is talking about the advisors in the last 24 hours giving this the nod, or the FDA approving it for emergency use authorization, which I, so far, Tom, haven't seen the headline on.
Yeah, and the other thing is the mystery of the distribution, the second, third wave of millions of doses. That itself is a mystery as well.
From New York and London this morning, good morning to you all as we count you down to the opening bell with equities at all-time highs. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A panel of Food and Drug Administration advisors has agreed that the benefits of Moderna's coronavirus vaccine outweigh the risks. That sets a stage for Americans to have a second vaccine The FDA could authorize use of the Moderna shot as early as today. It's based on the same technology as the Pfizer and BioNTech vaccine that was approved last week. The coronavirus pandemic is once again hitting meat packers across North America, and they're trying to avoid the shutdowns that left supermarket shelves empty earlier in the outbreak. Cargill has temporarily closed one of its beef plants in Canada after some workers tested positive. The world's top meat producer, JBS, sent thousands of vulnerable U.S. employees home on paid leave. We're getting a better view of just how large that cyber attack by suspected Russian hackers is. Authorities have warned that the hackers present a grave risk to federal, state, and local governments and to the private sector. Microsoft says its systems were exposed to malware, and Bloomberg has learned that at least 3 state governments were hacked. So was the U.S. Nuclear Weapons Agency. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
The trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Flow of vaccine is always going to be a little bit variable. We're talking about production at a scale that companies have never had to do before. And so you certainly should expect to see some variations in the number of doses that are coming through on a weekly basis. It'll become even more complicated in 3 to 4 weeks when people have come back for their booster doses. But again, these are logistics problems.
Dr. Andrew Peskos there of the Johns Hopkins School of Public Health from New York and London this morning. Good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. And Tom, the challenge won't just be logistics. It will be confidence, public confidence around the vaccine. It will be a challenge for countries around the world for the year to come.
If you do microbiology, John and Lisa, like I did, there is a rite of passage. It is called a small book, Microbes in Man. And just as you say, John, you've got to go out, do it, invent it, and then show to the people, the nation, the city, the town that it's okay. It is stark images. For those of you on Bloomberg Radio, an American flag to the left, a hospital flag to the right, and the lined up vaccinators in white coats waiting for the vice president of the United States and Mrs. Pence. I would say, Lisa, an extraordinary moment, and I'll be blunt, Lisa, I'm surprised we haven't seen more of this.
Yeah, the idea of trying to engage the public, make them have confidence in this vaccine as we roll out. And honestly, Tom, I got to say that I don't think we've done enough with the Moderna approval. That could be a game changer given how much easier it is to distribute.
I just want the elite to get out there and do this. John, I mean, you know Beyonce, is she going to be out getting a vaccine here?
I don't know about Beyonce, Tom. We're not that close. I might try and find out for you. Look, I think it's important that leadership gets out there. The people that approve the vaccine should be seen to be receiving the vaccine. Tom, I think that's important.
We have tried so hard to talk to professionals through this. I think to our team this year, they've been hugely successful. And don't kid yourselves, folks. It's not the three of us, Paris Wald, many others here every day struggling to find the people getting it done. Tom McGinn is with Common Spirit Health. He's our executive vice president of Physician Enterprise. And what you need to know is this is the Catholic initiative across this nation, 190 plus hospitals lined up in the trenches of service on COVID. Tom, your hospital chain is absolutely unique. What have you learned? What is the distinctive feature Common Spirit in your hospitals has learned over the last tough months?
Well, we've had a lot of lessons learned. I think during this distribution phase, we certainly know that all our markets are different. We have to work across different state lines, different cities, but we partner locally. And then we try to coordinate nationally so that we can drive things like, for example, the purchasing of refrigerators was a national effort on our part, and then distribution of that at the local sites. So we've learned a lot about, local distribution issues that I don't think any of us ever thought we would need to know.
Dr. McGinn, one thing I'm unclear on is how much the federal government is orchestrating this entire affair. What's your sense of that?
Well, it's definitely, starting at the federal level, but really the hard work of distribution is occurring at the state and then the local level. So that's why, we're in 21 states, we're 130 hospitals. So a lot of the effort that we have to go through is thinking at the city, state, and that level, much more than at the federal level. Our engagement is in local communities. We're a large local community hospital serving some of the most underserved communities and all communities across the country. So a lot of the hard work is working at that local level.
I guess there's a question, which is, should it be done this way? People were talking about, we've been planning for the vaccine for a while. Should we have had some sort of orchestrated way to get some of these healthcare organizations funding to buy those refrigerators, to get this distribution network in place, or should it be done on the local level?
Well, I think that it's always going to be a mixed match because I think the local level understands better where the needs are and how to get things done. I do think some of the larger questions, such as procurement, it may have benefited a little bit more from a strategy nationally so that there was an even distribution of some of these things. But I do think that certain issues around, where the exact vaccine is going to go on the ground in a town, in a city, is a very local decision that would be very difficult at the federal level to do.
Dr. McGinn, tell us about what you've learned in Los Angeles. That seems to be the focus on this Friday morning. With Dignity Health, you've got the California Hospital Medical Center. What have you learned about the scarcity of beds in the worst case, Los Angeles?
So, usually when you look closely at these problems and you start thinking about it, we are able to stand up ICUs. We actually have the ventilators, we have the PPE, we have all those things. A lot of what we're struggling with is the staffing, and I know you've heard that probably across the country. So at the end of the day, it's our frontline nurses, our respiratory techs, the intensivists, the hospitalists. Those are the folks that we need more and more and more of, and they're becoming harder and harder to find.
Is that a solution of just higher compensation? I mean, you've been doing this for years, including at Downstate Medical here in New York. What is the solution to short staffing? In all the industries we follow, you raise compensation and they show up. Is it that easy, or is it a harder mission?
Well, this is much more complicated than just compensation, because remember, this was, just suddenly thrown upon us. We've the equivalent of opening up several new COVID hospitals overnight, and it was at a very specific area. It's in the med-surg space and the intensive care space, and it's only in the last 6-8 months that we've needed this rapid increase of staffing.
Doctor, appreciate your time this morning. Thank you. Dr. Tom McGinn there, Common Spirit Health, Executive Vice President of Physician Enterprise. Just waiting for the Vice President, Mike Pence, to receive his vaccine, along with the Second Lady down in Washington, D.C. Tom Keene, that is taking place in just a few moments.
Karen Pence will show up with the Vice President. I don't know who's going to be holding whose hand. I know the Second Lady can hold my hand, John, when I get my shot. We're waiting for that right now. But, again, this is the symbolism of the moment, and you really wonder, John, it's a lot of la-di-da and all that. I want to know how we distribute the vaccine given the temperature constraints in the trenches of this, in places that don't have all the luxury that we see at the Eisenhower Executive Office Building.
So you're speaking to the Pfizer vaccine, which is the vaccine that would be administered in just a couple of moments to the Vice President and the Second Lady. The Moderna vaccine, as Lisa pointed out earlier on this morning, much, much more significant just in terms of the temperatures you need to keep that at and the ability to roll that out with a little bit more ease. And I'm speaking to the logistics here. That's the important factor. On Moderna, the president commented moments ago, saying the distribution would start immediately, that the vaccine had been overwhelmingly approved. A spokesperson for the FDA has just come out, Tom, and said the Moderna vaccine isn't yet authorized. And I spoke to that confusion briefly, that what happened yesterday was a panel of advisors to the FDA giving this vaccine the nod. What needs to happen now is the FDA needs to give it emergency use authorization. And Tom, that hasn't happened yet, even if we all expect it to happen at some point in the next 24 hours.
Well, yeah, it's as simple as that. I mean, Lisa, what's your observation on this, to see this moment with the Vice President?
Well, the moment for the Vice President is the importance for public officials to come out and show that it's safe. With Moderna, this rush and the sort of, well, I guess this really is the reason why it's important for public officials to get it, trying to not politicize it. The idea of just giving people confidence it's safe, John.
The two moments speak to each other, don't they? In about 5 minutes' time, the Vice President of the United States, Mike Pence, will receive the COVID-19 vaccine from Pfizer, from New York and London. This is Bloomberg.
Retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There's an argument to be made that perhaps we've gone up a little too far, too fast.
These companies have had these parabolic moves. There will be a day of reckoning.
When you look at hiring, you're seeing those permanent layoffs increase.
It's quite possible that you'll see numbers start to disappoint. The real yield hasn't gone up, which is another reason why the Fed price stood pat.
It's going to be really difficult for the Fed to latch onto this notion that they're not going to do anything until 23.
The way people are spending, the timing of that spend has really shifted.
I do see the economy getting back to something close to normal in the second half of next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene on radio, on television on this Friday, really moving into the holiday spirit. We're trying to figure out our schedules. It is the last time we're together till hell freezes over, which is deeply emotional. Lisa, I can barely contain myself.
I think it froze over if you look outside.
Actually, it froze over here yesterday. Thanks to our team yesterday, radio particularly, for just a great effort in this snowstorm. Rob Carroll and making me smarter about it as well. Right now, we've got some important drama, and it's not the data. The data somnolent, as Farrow would say. The real yield, negative 1.04. That gets my attention. Look for the real yield, but right now, look at the emotion we've all been through on this pandemic. The Vice President of the United States walking in, I believe it's an Indiana look, a short-sleeved look, is that he will take the shot in the vaccine here with Karen Pence as well. John, I mean, this is playing out all over the world.
Well, Tom, let's be clear here. Short sleeves because it's tough to take a shirt, a dress shirt, and roll up the sleeve high enough to receive the vaccine, which is why the Vice President has chosen this particular outfit, Tom.
Yeah.
Let's move past that quickly.
About his shirt.
Last week was a really important moment with Sandra Lindsay of Long Island, an intensive care nurse being the first individual to receive this vaccine. An important moment to recognize that the front line in healthcare are still facing huge risks out there, and we need to get them vaccinated quickly. This moment is much more about public confidence, that we have high-profile officials in the administration, Tom, receiving the vaccine, because confidence is going to be a big issue as this rolls out and ramps up in the months to come.
What's so important here, Lisa, is not only the gathered, including the vice president, and I believe Dr. Fauci there as well, perhaps members of the CDC, but these people robed are the people in the trenches, and they're doing this every day, and they're not doing it at the Eisenhower building in front of cameras.
No, it's a massive effort. And I want to speak to something John was talking about earlier, how this moment speaks to the Twitter post that we got from President Trump and then the subsequent comments from the FDA. President Trump coming out and saying on Twitter, Moderna vaccine overwhelmingly approved, distribution to start immediately. The FDA coming out and saying the Moderna vaccine isn't yet authorized. How does that contribute to public confidence? We've got these two dueling messages, Tom. We all want the pandemic to be over, but we want it to be done safely.
Karen Pence, a school teacher from Indiana, and of course the First Lady of Indiana, as the governor did his tour of duty there before being vice president, and she making an appearance as well. John, the idea of these vaccines comes back to what's going to happen in, I believe, 3 weeks. The Pences will do it again.
The Pences will have to come back in 21 days. And Tom, that's the issue here, isn't it? It's not about the first vaccine, the first vaccination. It's about the second one. We need to get people to come back, which speaks to the effort that this country and the world is about to go through to not just get everyone vaccinated once, but to get them vaccinated twice, Tom. This is a huge uptaking for the healthcare industry as the Vice President Mike Pence receives his vaccination just like that, Tom.
Just like that. And I really want to point out, folks, the science here is so important, and we've learned that with our commitment to bringing you the best in epidemiology and virology as well. And what it is about is the magic of the phrase mRNA. These are different vaccines. They're not like the polio vaccine from the 50s. In microbiology, they're no way anything like the miracles we saw with typhoid or diphtheria. This is truly modern science. And John, I go back and back to what all the pros have told us is that the timeline has been remarkable.
Very much so. And this market has had to adjust to a much better future, perhaps a better reality in the back half of 2021 because of the work done in the healthcare industry and from the likes of Pfizer, BioNTech, and now Moderna as well. Let's bring in Eric Friedman, US Bank Wealth Management Chief Investment Officer, and stay with this moment. Eric, for investors, for our audience worldwide tuning into a program like this is a really important moment because this market is positioned for a better future, largely because of what has rolled out, what has taken place in the last couple of weeks.
It really is, Jonathan, and it's a market that I think is not only anticipating what we already have in terms of vaccines, but also the possibility of some single-dose vaccines, which is not really a story that a lot of people have been talking about. But there is the potential for a plurality of vaccines coming in the next month and a half. Again, not definitive, but that could be another leg to the story that gets more people vaccinated more quickly, which of course means great things for society and also would mean great things for the economy.
We'll continue to monitor the comments of the Vice President. Our headline team is watching the tone as he addresses Dr. Fauci and others at the Eisenhower building. Eric Friedman, I can go narrow, I can go bigger here. Let me go bigger first. It's been a stupendous recovery from the depths of March. Can you commit to equities and participate in the equity markets with this better news?
Tom, we can. We do think that the key pivot point for this year, actually the upcoming year, will be in the end of the second quarter and the start of the third quarter. That's when we think the Fed and other central banks will really be tested. Before then, we have a number of catalysts, which I won't list out. But we think that on balance, you can remain committed to equities. Jonathan and team did a great job of recapping the mid and small cap performance, which has been just remarkable. We still think that there is leg to run in global equities, but we do think that the potential for some higher inflationary readings. Again, we don't think that inflation is going to be rampant and run away. But we do think that central bankers will be tested in the late second quarter, early third quarter to really, see if they're going to stick to their guns and remain very accommodative.
What do you think would be the tipping point for inflation rates to start to affect valuations in stocks and to really hold the Fed's feet to the fire?
Lisa, I think the biggest thing would be, number one, a move in the 10-year above 1.25 on a more pronounced basis. That is something that, again, one of the questions that you asked in the previous sections was what would cause equities to roll over. We think that a move higher in interest rates would be just that. Now, we're seeing a tick up in real yields, and that's something that's not new news. But what is also really interesting is we're still seeing a preponderance of negative debt readings, across the globe that's still very sticky. So we do think that if we see bond yields tick up a bit higher and do so in an abrupt fashion, we do think that that's something that central banks will have to address with it, at the very least, verbally. So those are the things we're looking out for in the next couple of months.
If you're just joining us across this nation and worldwide, Eric Friedman with us with U.S. Bank Wealth. Thrilled he's with us, and we continue this moment in Washington, the Vice President and the Second Lady of this nation taking the vaccine, and of course, we hope to see many more symbols like this in the coming days. Eric Friedman, it is about a recovery, but it is a recovery with a massive labor shortfall. Gauge the advantage of this stimulus, and does U.S. Bank Wealth Management just assume a second stimulus will be required as the Vice President goes back to Indiana?
We think there will be really an appetizer, Tom, and then a full entree, and that's of course very difficult to handicap. It does seem like the political will is there, and irrespective of what happens in Georgia in the first week of January, that there seems to be that bias. So what we're seeing across both our lending franchise at U.S. Bank as well as just our data readings is that things are getting incrementally better, but not better at a rate that policymakers will be pleased with. So we do expect to see some moderation in political wrangling. We will expect to see some progress. But we also think that plurality of vaccines and really the confidence that CFOs in particular will have to execute CapEx is going to be a big driver for us. That keeps us still in that glass half full bullish perspective. Again, we'll have to pay close attention to what happens in the third and fourth quarters of next year, but we still think you can commit and be involved here.
Eric, one question we've had continuously over the last month is just how much bad news we'll be willing to ignore, largely because of the scenes that have just played out in the last 10 minutes. The vaccinations have started. The policymakers have been on top of this through this year. The world of science has been on top of this, but we still lack that bridge to the other side, Eric. Without that fiscal deal, without that aid package over the weekend, how much bad news would you be willing to ignore between now and the moment where it's not just the Vice President Mike Pence getting vaccinated, but a good slice of the population?
Yeah, I think that's a real central investment question, Jonathan, one that we wrestle with quite a bit. I think that the answer is this. When we can find some more attractive alternatives to our current positioning, and really we think that that would be predicated by higher rates. And until we see a rate environment where we do think we're being compensated at not just the corporate level, but also across mortgages, also across broad government debt, those are levels where we'd say, you know what, then we may swap out of more growth expectations and into more traditionally safe assets. But we're just not seeing that attractive pivot point, if you will. I think that one way to look at this is a risk premium framework, which again, not to bore listeners with, but people like me have to decide, am I being compensated by going into something else besides what I have in client portfolios right now? And the answer is we're just not. So if we see that pick up because of concerns on the growth side, that would be a factor that could cause us to rotate. But until then, we're going to stick where we are.
Eric, appreciate your time, sir. Eric Friedman from the U.S. Bank Wealth Management. Thank you, Eric. Have a great holiday, sir. The Vice President Mike Pence speaking at the moment after receiving the vaccination. He says the following: the Moderna vaccine shipping will start when approved, not yet authorized, could be within hours. You compare and contrast the comments from the Vice President with the President's comments himself around about, 45 minutes ago, Tom? He said the following, that it's been overwhelmingly approved and the distribution will start immediately.
Yeah, well, something that's come up as well, and I've seen it out on Twitter, John, very quickly, the president not taking the vaccine, and there's some discussion that because he was ill, it's not the best thing for him to do.
From London and New York this morning, good morning to you all. Coming up on this program, the conversation in Washington will continue with Lensley Vinjamuri of Chatham House. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The U.S. government faces the prospect of a partial weekend shutdown. That's according to the Senate number 2 Republican John Thune. Top leaders in both parties are working to complete a coronavirus relief deal that's tied to a giant government spending measure. Thune says some senators opposed to parts of the relief bill may not go along with other funding extension, which could lead to a shutdown. And the U.S. is set to blacklist dozens of Chinese companies, and one of them is the country's top chipmaker, Semiconductor Manufacturer International. That's according to Commerce Secretary Wilbur Ross, who spoke to Fox News. The blacklist prevents the Chinese companies from buying U.S. technology. The UK's chief negotiator warns that time is running out to reach a trade agreement with the European Union. And British Prime Minister Boris Johnson says talks will fail unless the EU backs off its stand on fishing rights. Behind the scenes, though, officials say the talks are progressing and negative language can be just a negotiating ploy. FedEx has failed to keep up with Wall Street's soaring expectations. A jump in costs hurt profit margins in the fiscal second quarter, and it spurred doubts about how much FedEx will cash in from record package deliveries. Shares are lower pre-market. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into this SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm glad to see that stimulus is coming. I'm glad to see help for small business. I'm glad to see continuation of unemployment insurance. But this is not as good a bill as we could have had. Still, it's better than I expected 2 weeks ago, and we should be grateful for that.
Former Treasury Secretary Larry Summers there on the prospect of a fiscal agreement down in Washington, D.C. We may have to have a little government shutdown before we get there, though. We're getting closer. We're just not there yet. From New York and London, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Your equity market looks like this morning, 1 hour and 12 minutes away from the cash open. Equities up just a single point on the S&P 500, in and around all-time highs. In the FX market, 122.60 on euro dollar. We come in about 0.1%. Dollar coming back just a little bit after a week of really pronounced dollar weakness at times against the euro and against the bulk of G10. In the bond market, Tom, just to wrap things up for you, yields come in almost a basis point to 0.9263%.
And I note the real yield, to me, that's the big story of the week, and it deteriorates further through the morning. This is the nominal yield fixed, inflation expectations up, and that means an ever more negative real yield, negative 1.0405. John Ferro will advance that discussion, widely anticipated on the real yield this afternoon. Right now, Leslie Vinjamuri, Chatham House. And Leslie, I want to cut right to the chase. It wasn't just about a St. Patrick's Day photo shoot of Tip O'Neill and Ronald Reagan. There was actually discourse, and there was actually compromise with Howard Baker of Tennessee as well. How do you do compromise in 2020?
It's really tough, but we are hearing that the president-elect is already working on that behind the scenes, and I think people believe that if anybody's going to be able to do it, he's certainly got the experience of working Congress at a time when Congress believed in bipartisanship. But we're seeing the result of a very polarized America, a very partisan Congress, and in trying to get this fiscal stimulus through, possibly a shutdown for a few hours before it gets passed. And a lot smaller number than a lot of people had hoped for. But the fact that it's even moving forward, I think, is good news.
Do you buy the idea and the zeitgeist? And certainly after we played the McConnell video all day on TV, you heard it on radio. But the McConnell video was before the sea changes of last night. Do you buy the idea that the senator from Kentucky is shifting because of the two senators in Georgia?
I think there's no doubt the Georgia elections are factoring on everybody's minds. That, they're critical. They matter, as we all know, for the control of the Senate. And that is going to be absolutely key for the size of any packages, spending packages that get through Congress. Everybody, I think all eyes are on January 5th, and it's coming up. It looms large. It's coming up very soon.
Leslie, given the fact that everyone is focused on Georgia, is focused on fiscal support, is focused on the election that just happened, how much has focus gotten diverted away from the national security issue of these hacks? In other words, should we be putting more emphasis on those and the potential implications for foreign policy in the U.S. next year?
Well, yes, I think we should. And I think this is very interesting, of course, because it's not only that this seems to be a major news item that's getting radically underplayed, but it's also, the ongoing issue of, does President Trump want to call out Russia? And what we've seen for 4 years is that the answer to that is very clearly no. We're going to see a really big shift. This is probably, of all dimensions of foreign policy, this is probably the one where we'll see the biggest shift. Vice President Biden, soon to be President Biden, will take a much tougher line on Russia, and he's got a lot of support for that across Congress, across the U.S. electorate, and certainly across Europe.
How will his approach differ from what we saw under President Obama, Leslie?
Yeah, President Obama, of course, came into office wanting to reset America's relationship with Russia, not unlike many previous presidents. But of course, he governed through 2014. And that became very difficult after the illegal annexation of Crimea and the troubles in eastern Ukraine. So I think, the Obama's policy towards Russia shifted throughout the course of his presidency, and Russia changed. So I think Biden's coming in. It's a much tougher dynamic with Russia. We've since had the electoral interference of 2016. We're now on the back of these cyber attacks. So I think we're going to see a really tough line on Russia, and I would imagine the question of sanctions will come up very quickly.
Well, let's talk about that now. What kinds of sanctions would you expect?
Well, you know, what we often see is an attempt to isolate individuals and organizations and work out who's to blame. And I think that, you know, part of that's going to, there is a question right now, right, of whether we'll see those kinds of sanctions right now. I think it's less likely because of the current distractions. But I think we'll see some targeted, we'll see a question of whether or not there will be targeted sanctions once the new administration's in place.
Well, how abrupt a change will it be? I mean, I think it's fascinating to see this shift from what anybody believes about President Trump over to a President Biden who had a lot of vice presidential foreign experience. How abrupt will that shift be?
You know, overall, there are some things that are going to be in line. Tougher position on China. That's happened during the course of the Trump presidency. That will continue. But I think it will be much more leverage and much more comprehensive, right? Really, the China focus has been on the tariff war. It's been on trade, on technology. Those things will continue. I don't think we're going to see a lifting of the tariffs too quickly, but I think we're going to see a much harder line and a much more comprehensive look at market access, IP, at all the broader issues, as well as the question of democracy and human rights. Trade, it's going to remain tough, but I think Russia will see a change. And we're clearly going to see, you know, a return to multilateralism, a new form of engagement, always with one eye back, two eyes back on what the implications are for investment in America, democracy, investment in infrastructure, rehabilitating, you know, really bringing forward that economic recovery. So we're going to see American leadership, but it's certainly going to be focused on fixing things at home. It's going to look very different to the rest of the world. Certainly going to look very different, Tom, to those of us sitting here in the UK and in Europe.
Leslie, we'll move on from what's happening in the UK quickly. We appreciate your time this morning. Thank you. Leslie Vinci-Murray, Chatham House Head of US and America's Program.
John, we got through that without talking about Brexit, right?
We did.
We can have Vinci-Murray back. That's great.
He's trying to make it
Can we
change.
leave it that way? I'll be off next week, so hopefully they'll settle on a deal.
Brexit all
this
the time.
Weekend. You can spend the whole week talking about it.
7 a.m. Wall Street time.
John,
Brexit
really?
cover to cover.
Come on, John.
You excited about it, Lisa?
Really?
Maybe we talk
What are
about
you trying
talks
to do
next
to
week
me?
too.
Seriously?
Just you
seriously.
two. I can see that, you two on air. How long do you on air together next week for?
12 hours.
Yeah.
5 hours.
5 hours every day.
5 hours together.
12 hours.
Stop laughing.
5 hours. I think Brexit would be good for you. I hope
John.
that DC wraps up a deal so you literally have nothing else to talk about next week apart from Brexit.
We're going to just talk about deadlines the whole time. The importance of them,
You
the
should do that.
concreteness of them, how much you like cats.
Yeah.
Do you have to quarantine?
An important line coming from Dr. Fauci. Don't mention cats. You'll get me in trouble. Moderna, the vaccine, could be administered by Monday or Tuesday. That's the hope of Dr. Fauci, Tom. That line just crossing.
Well, there's an important headline. John, do you, when you go to Capri like you are, do you have to quarantine?
I wish I was going to Capri, but I'm not. And if I do go to Capri again, hopefully it's in the summer and we're all vaccinated, and I'll send you some pictures, Tom.
Just
Come
send
back
us
with-
some pictures.
come
this
back
time.
with
I'm
good
saving that
socks.
for the summer. I will say this. You know, I booked a flight the other day. Booked a flight.
To New York?
Very bullish view on things. I booked a New York to Milan flight for next summer. So there you go.
Look at that.
That's very, very bullish.
Optimistic.
Anticipating being back and also
Braver
being
than I
able to
am.
go on vacation as well. This is Bloomberg.
instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
From New York and London for our audience worldwide, I'll give you all a healthy piece of advice. Don't talk about a vacation you might have booked live on air when your managers might be watching and you haven't requested the time off. Just something to mull over if you ever end up in this position. Equities record highs across the board. Lisa, I might get that.
Like I said,
I might get that
are we
vacation
together
approved.
next year?
I hope. I hope. Maybe I won't be with you. Equities all-time highs on the S&P, the Nasdaq, and the Russell. The Russell advancing again after what, a 7th straight week of gains. Unreal. Longest weekly winning streak going all the way back to 2019. Switch up the board onto the bond market just very quickly. Really well behaved in the Treasury market, even without that extended average maturity that people were expecting in the asset purchase program at the Fed. Your 10-year yield, 0.92%, up on a week, but just a little bit. Maybe it's the bad data holding us back here, the wrong kind of upside surprise on jobless claims. Let's finish on this. Euro-yen in the FX market. Tom Keen's favorite currency pair. Yep. Euro-yen going into 2021. So on the euro side, you've got all that global synchronized growth hopiness. And on the yen side, you've got risk aversion. So what's happened over the last few months? You've guessed it, euro-yen out to the highs of 2020. In fact, euro-yen out to the highs going all the way back to early 2019. So that's a stronger euro, a weaker Japanese yen. Kick Dukes of SocGen, Tom, thinks this one is looking a little bit stretched. Any kind of risk aversion that bubbles away into year-end, perhaps into the new year, that one could be in for a snapback.
We will see. And Kit Juice, of course, looking at euro-yen, one of the great pro statistics. What we do on surveillance is try to do back-to-back conversations. We don't always succeed, but boy, has it been good recently. Benoit Carré and Noel Rabini were this a few days ago, and right now we do it. Raghuram Rajan is going to join us here from Boost School on an incredibly important paper wrapped around his book, my book of the year, a bit ago. But Peter Hooper joins right now, both of these gentlemen with IMF experience. Dr. Hooper, of course, running research at Deutsche Bank. Peter Hooper, how have you amended and changed your American labor and economic outlook off that horrific claims report we saw yesterday?
Well, Tom, you know, we've been below consensus in our forecast. We were actually expecting to see some slowdown going into the end of the year. Given both the runoff in the fiscal support, but more importantly, the acceleration of COVID. So that weakness did not come as a real big surprise to us. In fact, our forecast has been enough below consensus that the positive news on housing and on business orders, shipments of capital goods, enough to maybe cause us to mark things up a little bit. But no question, things looking really weak, both for the labor market and for consumer spending near term. I mean, the retail sales numbers we got both for October and the sizable drop in November.
Right.
The disappointment overall, but about in line with what we were expecting.
Tell me about the ambiguities of the inflation call. It's one thing for an academic like Rajan out at Chicago to pontificate about it. You guys are in the trenches actually guesstimating price change. How have you shifted that call?
We've been expecting to see inflation rise at a very low pace. I mean, there is increasing concern in the markets about the possibility of a surge next year as pent-up demand really drives consumer spending back up. I mean, a lot of upper-income households have been sitting on their spending. Savings have gone way up. There's a lot of wherewithal there. But the way we put the numbers together, you're talking about something like 10% of consumer spending that could take a big jump. And yes, you might get a jump in prices in some areas, and Jay Powell actually talked about this week at the press conference. But that's not going to touch off a big increase in inflation. Rental inflation is low and likely to remain low. Even healthcare inflation is likely to be a drag as insurance rates come down. So overall, we're anticipating a slow slog getting core PCE inflation up from the 1.6 range currently to it's just something still below 2% as we look a couple of years out.
How much would your economic forecast for inflation change if the Democrats take the Georgia race, get leadership in the Senate, and they pass some sort of $1 trillion plus infrastructure package?
Well, Lisa, certainly that's a plus. It's a plus for growth, but it's not a huge change. I mean, Georgia does make a very important difference in a number of respects, but it isn't going to mean a huge shift in fiscal policy. If the Democrats take Georgia, it's basically the center of the party, the centrist, or even the more conservative wing of the party that really controls things. Joe Manchin will be very much in a driver's seat there. So you're not going to see a huge increase. You're not going to see a $2 trillion package passed. You're not going to see the Senate get rid of filibuster and allow many of the things that could otherwise have caused the economy to get back to and above pre-virus trends relatively quickly and begin to get inflation up much more rapidly. So yes, it's a plus, but it's not a really big one.
This is actually really important and some slightly out of consensus, Peter. Other people coming on and saying that they expect that to sort of be gravy and adding into their economic forecasts. How much do you think expectations for a significant additional follow-on fiscal support package or stimulus, how much is that factoring into outlooks that you think are too optimistic?
I think there is a factor there, and as the Georgia race has drawn closer, certainly that is contributing. But I think at this point, and even more, the more important factor is how quickly the economy gets back to normal with the vaccines. And economic forecasters rarely have the event like this with the tunnel otherwise looking so dark in the near term, but the light shining this brightly. I mean, it's the prospects for getting back to something more like normal economic activity by the second half of next year certainly is, I think, what's driving the real excitement in the markets at this point.
Peter, stick with us. I just want to bring some headlines from an interview that we did with a Bank of England official in the last 1 hour or so. Dr. Vliga saying the following, that negative rates could help the UK complete the recovery. Not a conversation that he's been shy about weighing into. He says any rate cut must be more than 10 basis points to work. Of course, bank rate at the Bank of England right now is about 10 basis points. And this was the move on gilt yields at the front end. The whole curve is sinking, but your 2-year yield now is now negative 10 basis points in the UK, down 5 basis points on the session. Tom, what's interesting about this right now is not just that they are looking at possibly doing this, it's this theory that negative interest rates can, one, be helpful, and two, picking a spot in the recovery where they think it can be more helpful. It's something I've heard from the Bank of England a couple of times now, that maybe that negative rates help you coming out of the downturn to complete the recovery, as opposed to using them up front all at once at the very start.
It's just like sports, John. It's just like when the Tots lose to Liverpool, you make your luck, and to have Peter Hooper of Deutsche Bank with us as you bring this up, John, is really, really important. Dr. Hooper and David Folkerts-Landau have been way, way out front on thinking about what John mentions, which is the timing of negative rate policy, and also this strange economic word, the magnitude of economic policy. There's an assumption, Dr. Hooper, that negative rates really don't clear systems and improve economies unless you get enough oomph, that you get enough magnitude of negative interest rates. Have we been too shy and too reticent about using that tool where we're doing an itty-bitty here and there?
Well, Tom, I think we're at the point with monetary policy where we're beginning to push on a string here. Yes, in principle, getting rates ever lower does have some stimulative impact, but it also has some significant costs. And maybe less so in the UK, but in the US, the Fed is not looking at they're not going to go anywhere near this. They're really concerned about what the impact would be on the money markets, on the financial sector more broadly. So I think households looking at a negative return potentially on deposits as banks begin eventually to pass them through. A number of countries have really decided this is not the way to go, and some have reversed course.
Well, I'm not sure this housing market in the UK right now needs more juice. I don't think the United States does either. Peter, thank you. Appreciate your time, sir. Peter Hooper at Deutsche Bank, thank you very much. Cable 135.11, the pound against the US dollar, down by around about 0.5/6%. It's this line that I just find amazing from central bankers. The risk that negative rates are counterproductive is low. Tom, it seems to me that something happens when you arrive at a central bank, that you are the only people that believe that line is true. Because pretty much everyone that comes on this program, I would say 99%, if they are not a central banker, they don't believe that line.
It's a little confusing, John, particularly to our listeners and viewers, in that we say banker, and as Bill Rhodes would say, there's central bankers and there's commercial bankers. And there hasn't been nearly enough talk, John, about, as you say, somebody walks into a central bank and immediately forgets about the ramifications for the financial system. And that can't be underscored enough, how you got to keep your eye on that ball. That's been a huge issue in Europe. I can't calibrate the size of the effect on commercial banking in Europe.
I know someone who loves negative interest rates, Lisa Brammitz, big backer of negative interest rates. Lisa, your take.
Well, this is a question about income, right? I mean, if you're getting negative income, if you're unable to actually earn something on your money, that reduces inflation, that reduces the ability to spend, that reduces the prospects for retirees and for governments and pensions. This is the conundrum. How can that not be a negative impact economically, John?
Was that President Erdogan? Or was that Lisa Brammitz talking about
did you
low
just
interest
compare
rates?
me? Could you just compare me to the president of
The
Turkey?
unorthodox approach to economics. That sounded like President Erdogan.
Hold on a second. This is one theory out there about why negative
that
interest
low rates are holding back inflation. I just want to get that on record.
Low rates
are holding back inflation.
Low rates and negative rates are two different things.
Okay.
The idea that basically banks are not earning anything. Never mind, John. It's one theory
out there.
It's okay to
sound like
the Turkish president.
That theory is out there.
I really hope
the Turkish president shares it.
I really hope J.D. Martinez bounces back this season. That would be good.
I want a martini. How about that?
I'll be back in a couple of minutes
Lisa,
to wrap this
let
one
me
up.
get my watch out.
Hold
Little
that
early,
thought.
Lisa.
Coming
15
up
minutes.
Raghuram Raja,
15
former Bank of
minutes.
Indian governor. From New York and London, this is Bloomberg.
Hot stove league. Come on.
With the First Word News, I'm Rishka Gupta. A live TV audience watched today as Vice President Mike Pence received a coronavirus vaccine shot. The Vice President said he didn't feel a thing. Also being vaccinated were his wife Karen and Surgeon General Jerome Adams. Meanwhile, infectious diseases chief Anthony Fauci tells the NBC he hopes a second vaccine will be available by early next week. The Moderna shot was approved by a panel of the FDA's outside advisors. Greater Los Angeles is now the hardest hit metropolitan area in the U.S. when it comes to the coronavirus. Los Angeles County has an average 1,100 daily cases per million residents. Neighboring San Bernardino County has 1,400. New York was the hardest hit area in the pandemic's first months, but recently rural areas have been hit the hardest. And the coronavirus pandemic is once again hitting meat packers across North America, and they're trying to avoid the shutdowns that left supermarket shelves empty earlier in the outbreak. Cargill has temporarily closed one of its beef plants in Canada after some workers tested positive. The world's top meat producer JBS sent thousands of vulnerable U.S. employees home on paid leave. And we're getting a better view of just how large the cyber attack by suspected Russian hackers is. Authorities have now warned the hackers present a grave risk to federal, state, and local governments and to the private sector. Microsoft says its systems were exposed to malware, and Bloomberg has learned that at least 3 state governments were hacked. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Rishka Gupta. This is Bloomberg.
If we don't really know what output we're aiming for, then how do you know when you've arrived? So I think this whole notion of shifting the framework, I think it's going to wind up proving to be quite messy for the Fed down the road, particularly because we just don't have the guideposts in place. And again, I'm sort of sympathetic to them on some level, but on the other, I don't know why they had to actually go down this path.
Tom Porcelli, fantastic conversation on this program. RBC Capital Markets Chief Economist on the Federal Reserve. Do I sound a bit happy? It's because I am. We're almost there. A little bit later, Mohammed Al-Arian of Bloomberg Opinion, of Allianz, of Cambridge University, I think on the board of Barclays, Under Armour, all of the above. What a resume.
John,
he'll be joining us in about 15 minutes' time.
Look at how happy he is.
John,
TV.
The odds of you are so wound up, John, the odds of you having to reshoot the real yield this afternoon, you're going to be there till 6 p.m. tonight.
It's going to be positive yield by the time he gets there.
Exactly.
I'm going to record it. I'm going to record it on the steps of the Royal Exchange, just in front of the Bank of England.
Good.
Just me, solo in the city. It's going to be beautiful.
We hope Capri as well. John, it's just been...
Guys, thank you. Thank you. What a wonderful year it's been with you guys, too.
Thank you.
Have fun.
Sure.
The cats will be back next year. Don't worry.
I'm not even going to wait for the shot. I'll see you later.
He's leaving. Goodbye, John. Oh, we miss him so much. Let's do this right now, and this is important as we greet Mr. Farrow into 2021. If I have a book of the summer, sometimes it's so far out front, so shockingly prescient, given this pandemic, that I...
Stop on profit for euro at 122.51. That's right here.
But it is the third pillar, which is extraordinary. It is the single most prescient economic book I've ever seen. It's on community, whether it's community or whether it's corporations understanding that we need community. Dr. Rajan joins us this morning. Raghu, again, congratulations on leading the way in this pandemic. You and Mario Draghi have just done a Group of 30 survey on what corporations need to do. What is the community our corporations need to find?
At this point, really our worry is that there's a lot of distress out there, and especially corporate distress, of course, household distress also. But this report, which the G30 has prepared, is trying to say, well, as we come to terms with the pandemic, how do we deal with the massive amounts of distress which is under the radar screen right now, especially for small and medium corporations, but in many emerging markets also for bigger firms. And really the report is a wake-up call that we should start preparing our tools now because they will be needed in big measure.
There will need to be, in big measure, and Lisa will talk about this, about the clearing of markets and the zombies that are out there. Do we have a financial system now that can incentivize corporations correctly? Or have we jury-rigged it with negative rates and the rest of it where they can't operate in a normal thought process?
Well, I think we've opened the floodgates of liquidity to anything that has even a faint pulse, right? And that's the effects of both the credit programs as well as the really low interest rates, as well as effectively the massive amount of purchases of various forms of securities in the markets. So at this point, it's hard to tell who really deserves to stay afloat, given that they have a viable business going forward, who's struggling to stay, has a viable business, and who simply doesn't have a viable business, and we're just keeping them on life support. I think the quick and easy decision to supply liquidity was important. There wasn't time to make, more detailed decisions. But as time goes on, we will have to make these more careful decisions because society can simply not afford the amount of resources that are being poured into the system.
So, Raghuram, what are some of the tools that you foresee policymakers using to determine which companies are truly viable and which are zombies that need to die?
Well, the first is to recognize that policymakers aren't in the best place to make these decisions. They have to rely on the opinion of both markets and the private sector to get this started up again in a bigger way. So the question is, one, of course, would be to start using various private sector opportunities, but in a less aggressive way. So, for example, if you're offering guarantees to small and medium enterprises, which a lot of European countries have done, can you scale back those guarantees and make them not on the basis of individual loans, but make it on pooled loan portfolios so that you give the lender some incentive to pick and choose? So that would be one example. There would be also a need for equity in many firms because we've sort of reached the limits of leverage. So can you, in a sense, find better ways of infusing equity, again, through partnerships? We've had partnerships after the global financial crisis, the public-private investment partnerships that we had in the US, for example. So can you co-invest along with the private sector? And which private sector partners do you choose? And how do you measure performance there? Because it has to be very transparent. But you could use those vehicles as ways of infusing equity. But you might want to infuse equity only after you've forced some debt restructuring. So can we find easier ways of debt restructuring, especially for small and medium enterprises? And do we change the bankruptcy laws? In a number of countries, the bankruptcy laws are focused on liquidating rather than restructuring and rehabilitating. We need a lot of out-of-court restructuring, but with the bankruptcy laws as a backstop in case that doesn't work, and those bankruptcy laws have to be a little more favorable to survival. These are all things we need to take care of now if we are to remove the overhang of both zombie companies, but also excessive debt on surviving healthy companies.
This all sounds really logical. It sounds methodological. It sounds like it is thought out. And yet I am still struggling to see us move out of a regime where you give liquidity, to quote you, to everything that has a pulse, and that we somehow avoid torpedoing markets that are relying on that liquidity going to everything that has a pulse.
It is a question of timing, right? What you want, I think, is to ensure there is light at the end of the tunnel. Light is sort of, to mix metaphors, is flowing into the tunnel. And at that point, you start moving the regime slowly and gently towards a system where this amount of support will be off the table. Now, at this point, as you know, we have a debate in Washington about whether the Fed should move abruptly from supporting a variety of these programs that they're already in. I would say that that decision should be made by the Fed and a little more gently, of course, in discussion with Congress. But it makes sense to do it when the economy is back on track, largely, when the uncertainty is off the table, rather than when the uncertainty is building even further because the pandemic is expanding.
Dr. Rajan, you have a chapter in the third pillar, the pressure to promise. Who do corporations owe a promise to? Obviously, their shareholders, obviously the equity interests of their executives, and we've seen these inequalities out there. Who do they owe a promise of a better society to?
Well, one of the arguments I make in the book is society changes. It's not the same society, it was in the late 1980s and 1990s. And there is far more pressure from society today on corporations. And even if they're acting in the interests of their shareholders, there are some things they need to do to keep attracting young people into the companies to do the right thing by their employees. And today, there's a lot more pressure on them to ensure that the employees are appropriately skilled for what is to come, to invest in training in a much bigger way than they used to in the 80s and the 90s. And this is also something that's, is in the interest of society. It is also something that customers increasingly are paying attention to. They're trying to ask, what are your green policies? And if you work for a corporation that doesn't have reasonable green policies, then the employees themselves start getting antsy. So what I'm saying is that even if you're managing in the interests of your shareholders, which I think is an important focus for corporate leaders, it entails taking into account both your community as well as your workers, as well as key suppliers. It's not, you don't make a statement that we're going to treat everybody really well, because that really means that you're treating nobody well. But you pick and choose the stakeholders that you're going to focus on, and you try and work towards them.
Well, congratulations on this effort with a group of 30 and with Mario Draghi. Raghuram Rajan, the former RBI governor of India, and of course at the Booth School in Chicago. We could go on, and we do not have the time. Lisa, your thoughts is, I feel so alone. I mean, I know John's already escaped.
I'm still here.
He's like
haven't
probably
checked
at
out.
Gatwick on the way to Capri. But Lisa, it's you and I alone now.
Yeah.
Without John. I haven't seen you smile like that in ages.
We've got no cat herder. We could just take it from here and go forward. You're going to be talking about the tots nonstop. I'll be arguing with the Arsenal.
Yeah.
I will say, I am looking forward next week. It's a big week. Do you know what Monday's going to happen? Tesla is going to be included in the S&P, and that's actually a huge deal.
There's some real criticism about this. Some
yes.
People, Howard Ward of Gabelli didn't mince words. He's against it.
Well, there's a question, a stock that is so volatile that has returned, what, like 600% this year or something insane. This idea that this volatility is going to be included in the S&P as a major constituent.
Amazing.
You know, people are talking, is this a Trojan horse? You know, what's this going to do to people's indexing?
Now, the question is, Farrell never would have thought up that ending for the hour. You nailed that on Tesla.
You're just going to be constantly jabbing him
I've never been to Capri. I got to look it up. He's going to be walking around, with... in the winter, got the eyes that thing looking. He's going to be styling.
Yeah, short pants, nice socks.
Oh, the capri pants. I get it. Okay, I get that. Bloomberg Television, the front row, an exclusive conversation with Kathy Wood. This is Bloomberg.
I'm moving my stop and profit further for euro to 122.49. Okay. Stop and profit move. Let's see if I will get profit will get executed. Yeah. 1 pip, just to remind, 1 pip equals £100. So as you can see already, if it will get executed, it will be already £100 in profit. Find out what, if you trade, what basically amount of profit you will get. You need to contact your broker. Sometimes they will give you £30, £5, £10 per pip. So just contact your broker, find out, and you will see basically what kind of profit you In our case, 1 pip equals 100 pounds.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work.
Position closed at 122.49. Have 400 pounds in profit on euro. Well done, guys.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now with equity futures up about 3 points. We advance 0.1%. We begin with the big issue. Equity markets hitting all-time highs with fiscal talks running down the clock.
We've yet to nail down every detail.
A few final issues must be hammered out.
We need to finish up and get this bill out the door.
But the details really matter.
We're very close to a point that arises in every major negotiation.
We're very close to an agreement.
Do we want to lapse into politics as usual and let negotiations lose steam?
The time for debate is over. Let's get this done.
None of the remaining hurdles cannot be overcome.
We're going to stay right here, until we're finished.
We will not leave until we get the job done.
Even if that means working through the weekend, which is highly likely.
Everyone is committed to achieving a result.
Leaders planning to attach the $900 billion relief plan to a $1.4 trillion government funding bill. Senator Toon warning that a temporary shutdown is still possible. He said, quote, if it's not for a very short amount of time on a weekend, hopefully it's not going to be something that would be all that harmful. The preferable route is to keep the government open and get this done and get it done quickly. Congress is dragging its feet. The FDA is not. Supporting a brighter outlook, Moderna's vaccine winning backing from FDA advisors.
Congratulations to us all for achieving this emergency use authorization for a second vaccine.
The evidence that has been studied in great detail on this vaccine is highly outweighs any of the issues that we've seen.
Assistance from all sides is very much needed now, with the U.S. economy showing signs of renewed weakness. Retail sales disappointing, manufacturing gauges now flashing yellow, jobless claims heading in the wrong direction. Joining us from Washington, Bloomberg Chief Washington Correspondent Kevin Cirilli. Kevin, it looks like this one is going into the weekend.
Yes, precisely. But I do want to say that based upon my reporting, they are dotting their I's and crossing their T's in terms of getting to a fiscal stimulus deal. And even while people like Senator John Thune, a Republican and member of Senate leadership, have come out and said that there likely will be a short-term partial government shutdown over the weekend. It's because talks are continuing over the very nuanced stimulus talks, which will likely be a bill of several hundred pages. That takes a long time to literally write out. And so as a result of that, people like Senate Minority Leader Chuck Schumer, Leader McConnell, Speaker Pelosi even, are all speaking incredibly optimistic. One of the issues, Jonathan, that has become a sticking point, so to speak, in these negotiations is what to do with the $300 billion from the central bank. Remember, Secretary Mnuchin, Fed Chairman Powell, having a back and forth on that. And Senator Pat Toomey likely going to be, if Republicans hold on and win in Georgia, the chairman of the Senate Banking Committee, which will oversee the Fed's confirmation process. He's taken up this issue about that $300 billion, and Republicans on board that should be part of what is used to pay for these stimulus talks.
Kevin, where's state aid now? Left out of this, any chance of getting this done anytime soon, within the next 2 years?
So, two things. First and foremost, from a broader standpoint, Democrats are being told that aid for state and local governments, they will have an opportunity to do so with President-elect Biden in his first 100 days when he attempts to get through another fiscal relief package. But the second point, and this is an interesting one, is that Senate Majority Leader Mitch McConnell is also viewing that second relief package in President-elect Biden's first 100 days as an opportunity to really hammer home liability protections. And it's a case of emerging strange political bedfellows. We focused, rightfully so much on the private sector as it relates to liability protections. But there's another industry, the higher education industry, which is carefully monitoring liability protections, and they might find a sympathetic ear from Republicans as well as centrist Democrats.
Kevin, thank you, sir. A lot of this will come down to what happens on January 5th of 2021. The economy is getting weaker. Mohammed Al-Arian of Queen's College raising concerns about the trajectory of the U.S. economy, saying the bottom line of this week's economic data is notable and accelerating weakening led by jobs and consumption. Mohammed Al-Arian joins us now for more. Mohammed, always great to catch up with you, sir. We've seen this movie before. Restrictions, weaker data, we reopen, and we snap back really quickly. Is this going to be any different?
Well, we hope it will be different in the sense that we've got the vaccines at the end of this tunnel. So the light is shining a lot brighter, but ironically, the journey there has gotten darker, John.
One thing you've said, and said repeatedly earlier this year, to know where you're going, you better know where you're starting from. A lot of people are willing to de-emphasize where this economy is going in the near term, Mohammed, and emphasize where we'll end up, the destination, with a vaccine much better the back half of 21. Do you still think that's a mistake?
So I think it's a mistake because you can't apply it across all sectors. It's not a mistake if you're applying it to tech. It's not a mistake if you're applying it to other sectors with very strong balance sheets. But if you are investing in a company with a very weak balance sheet, yeah, that would be a mistake.
We were asking a question yesterday, I asked it repeatedly this morning as well, Mohammed, what it would take to get equities to go down. What do you think it would take to get this stock market to go down? Here we are at record highs. Fiscal talks haven't resolved. We think they might. Data's weaker going into 21. It's very difficult to paint a bearish story for stocks, Mohammed.
Yeah, and you've heard me say over and over again, respect the technicals. And the technicals are incredibly, and I stress incredibly supportive. So what would it take? It would take a U-turn on monetary policy. The probability of getting that is de minimis. 2, it would take a massive accident in some segment of the market because people are overstretched. Well, financial conditions are so loose that the probability of getting that is very low. 3, it would take a wave of bankruptcies. That's the most probable risk, but it is a risk, not a baseline. I understand people who are surfing this massive liquidity wave. I really do. It makes total sense from the short term, but the further you go into next year, the more you have to care about fundamentals.
On the policy front, Mohammed, do you think we're trapped here? That there is any exit for policymakers coming out of this?
So, it's really curious on the policy front, Jonathan, because where you want policy, you're not getting enough. And where you don't need policy, you're getting too much. That's a fundamental imbalance in the policy mix. And we will get some more fiscal policy, but let's be clear. It will be limited, it will be narrow, and it will not be sufficient. And the big question for me is not whether something is better than nothing. Yes, something is better than nothing on the fiscal side. But the bigger question for me was raised by Kevin. What does it mean for the next round? So ironically, we were hoping to get relief now and then pivot to a lot more than relief when the Biden administration comes in. It looks like we're doing a bit of relief now, and the first 100 days of the Biden administration will be occupied by relief to local and state governments, whereas we need a bigger pivot in policy.
Assuming that there will be another round, Mohammed, how critical do you think January 5th actually is?
It's really important, John. There's a lot of people who say a divided government is best, but when you need to take big policy decisions, you do need the ability to get things done. So either you would hope for some collaboration among the two sides that we haven't seen for 10 years, or you need one party to be in control.
Mohammed, most Fridays of this year, you and I have caught up, and the year has changed radically as the year has grown older. Let's just look back and reflect just for a moment, Mohammed, on the lessons of this year for you, your takeaways, if you will.
So my biggest takeaway, there are three. One is, of course, for markets, that liquidity matters a great deal. And if you have someone with a printing press in the basement willing to use it, pay attention. Two is the extent, the weakness of our safety nets. A lot of people have suffered this year, John, and they shouldn't have. And it just tells you that our safety nets are too weak. And third, what we haven't focused enough on, John, are the silver linings of this crisis. You and I can take up your whole show talking about the silver linings, and that's important because we need to bottle these up and make sure they stay with us as we pivot to a more normal world sometime next year.
Let's apply some of that to markets as well, Mohammed. You've been very open and transparent about the fact that you weren't as constructive on risk assets as you perhaps should have been, and the outcome is evidence of that. We look at the outcome and we say, yes, that is true. But Mohammed, when you look at the process that you go through to make these decisions, any reason to change that process after the year that we've just had?
So looking back, I wish I had paid more attention to technicals and less attention to fundamentals. I exited too early. But John, I always ask the question, and I'm really glad I'm not investing other people's money because I would hate to be doing it in this environment. But I always ask the question for myself. If I end up making a mistake, is it a mistake I can live with? And that's the question every investor has to ask. I can live with the mistake of saying, you know what? I was too pure on fundamentals. I cannot live with a mistake that says I ignored a process that has served me well and just went for the big liquidity surfing element, and I misunderstood those dynamics. So, clearly looking back, I wish I had paid more attention to technicals, but ultimately every investor has to be comfortable with their process.
Yeah. Well, the reason I ask this, Mohammed, is whether we have gone through some kind of paradigm shift that means that your process adjusts somehow. And that I think, and there are many other people that write extensively about this, that we define whether our approach has been correct by the outcome and not the probability that the process was the right process to go through, that the approach was right regardless of the outcome, and to manage the probabilities. We talked about that with the work of Mrs. Duke earlier this week with Gershon Distenfeld of Alliance Bernstein. Mohammed, that's what I'm trying to get at here, whether something's changed this year or whether the lessons you learned this year will ultimately lead you down a troublesome path in the years to come.
Yeah, that's hard. Look, this is a multi-round process, right? So you've got to adjust dynamically. I think of it very simply, John, as the following. In your portfolio, you always want to have what I call a structural layer, things that make sense over time because you're exploiting structural mispricing. You also want to have a secular layer, you are positioning for long-term trends. But there's a third level, which is the technical side, the ability to be a lot more opportunistic. And what this year has taught me, certainly, is be more opportunistic and pay attention to that layer. It doesn't mean sacrificing the other two. And how you position those three depends on your risk tolerance and your ability to absorb the ups and downs of markets. But the big lessons for me is opportunistic stroke tactical is something that requires as much attention as the structural and secular layers.
We've enjoyed your contribution, Mohammed. A special thanks from me and the whole of the team for everything. And please thank the family for allowing us to have so much of your time through 2020 as well. Enjoy the holidays, Mohammed.
Thank you, John, and thank you for everything.
Thank you, sir. Mohammed Al-Arian there. Coming up, the FDA close to approving Moderna's vaccine on the heels of a panel recommendation. That conversation still ahead with Kathy Jones of Charles Schwab. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The FDA advisory panel recommended approval of the Moderna vaccine, and when it is approved, we expect later today we'll be in a position to ship 5.9 million doses of vaccines all across the country next week.
One step closer to a second vaccine, an FDA advisory panel giving Moderna the green light. The spotlight now on the FDA to grant emergency authorization. This, as Vice President Mike Pence becomes the first member of the Trump administration to be vaccinated with the Pfizer shot. The tensions are brewing between the government and the company. Officials claiming they're not getting as many doses of the shot as promised. Pfizer denying those claims, saying the following: "We are not having any production issues, and no shipments containing the vaccine are on hold or delayed." On this, Bloomberg's Kayleigh Lyons has more. Hey, Kayleigh.
Hey, John. Well, questions about the supply of Pfizer and BioNTech's shot do hang in the air, but here's where the vaccination program stands thus far. Something like 50,000 Americans have already gotten the inoculation, and that number is expected to surge in the coming weeks as states roll out the shots they have received received thus far. Globally, 4 countries have launched vaccine programs. More than 1.1 million people have been vaccinated. It's certainly a start, but there is a long way to go, John. Right now, healthcare workers and long-term care residents are the only ones getting the shot here in the U.S. We're expecting more guidance from the CDC on Sunday as to who should be next. And of course, by the end of today, John, we could have a second vaccine approved here in the U.S. Moderna's getting recommended for approval by a panel of FDA advisors. Now, Trump tweeted this morning that vaccine was already approved. That is not the case. The FDA saying so, but still it could come soon. There obviously has been a lot of anticipation of this happening. You can see that reflected in Moderna's share price. It's up more than 600% this year, though it has come down this week, as indicated lower again this morning, so it could turn into a kind of sell the news event. And as I just was hearing you talk to Mohamed Al-Arian about, there is a light at the end of the tunnel, but we are still very much in that tunnel. If you just look at hospitalizations, which has been the key number in focus in the U.S. right now, they are very close to a record in states like California. Hospitalizations yesterday topped 16,000, capacity basically at its limit. Now, Goldman Sachs put out a note yesterday, said it does expect the hospitalization rate will begin to decline in January once more people are vaccinated. But in the meantime, that is something that states have to grapple with, John.
Kelly Lyons, thank you very much. Some of these numbers are absolutely staggering for all the wrong reasons. This from Axios earlier this morning. I'm sure some of you read it. 1 of every 200 Americans diagnosed with COVID last week, I'll read that stat again. 1 of every 200 Americans diagnosed with COVID last week. Incredible. This vaccine needs to be rolled out and quickly to change this story fast. Kathy Jones at Charles Schwab saying the vaccine is the key theme for 2021. She writes the following: we can't have an economic recovery without a pandemic recovery. Kathy, we have learned that lesson multiple times through 2020. Great to catch up with you. Walk me through your thinking into 21, please.
Well, I think we're with a consensus. We do expect things to get better as the vaccine rolls out, albeit the next, couple of quarters probably are still going to be pretty rough, particularly in the service sector where people still can't congregate, still can't go to bars and restaurants safely. So it'll be rough first half. It should be a better second half, but a lot depends on getting this vaccine out and making it, something that allows people to congregate again. That's the only way the service sector is going to pull out.
The service sector and service sector inflation is a big focus for this bond market going into 21, Kathy. At the aggregate level, we've got this huge amount of pent-up savings ready to go, ready to spend on services so people can re-engage with the economy in a way that they haven't been able to in the last 9 months. Kathy, how do you think that's going to evolve as the months progress into 21?
Well, there's been a lot of evidence that that pent-up demand is there. The savings rate is very high. People are booking. The bookings for vacations in the summer are way up. So it looks like we have enough pent-up demand to really drive the economy forward, assuming that we get the vaccine rolled out in a relatively quick fashion. So we do see that lifting not only GDP growth, but also bond yields and inflation expectations. You've got very, very easy monetary policy all over the world. We've got a weak dollar and all that and pent-up demand. If we start to see that economic growth really engage in the second half of the year, we think we're going to see bond yields move up, maybe as high as 1.5% to 1.6% by the end of the year.
160. Kathy, 160 is a lonely place, and I know it's not too far away, but consensus isn't up there, is it? Just walk me through that a little bit more, Kathy, because so far inflation expectations have picked up, nominals have been stable, and real yields really negative. You're expecting a change. Why?
Because I don't think the market has really fundamentally discounted the likelihood of that stronger real growth. And there's a belief that the Fed's going to sit on long-term yields. And I wonder if they really want to do that if those yields are rising simply because the economy's doing better and expectations are improving. We also, I think, have underestimated all along in this recovery the pace of demand being strong. And a lot of that has to do, of course, with the distribution of income and how hard this has affected lower income people versus upper income people, but in aggregate, we've outperformed. So I would say that I think it's not that big a stretch to get up to 1.5% or 160. That's where we were earlier this year before the pandemic hit. Now, a lot of people will argue that there's going to be too much scarring and that will hold us back. But I'm not sure the evidence is as strong on the scarring as a lot of people estimate.
So, Kathy, going through the calls, you're very constructive on the US economy, more so than most. On inflation also, a call option on that reflationary story. You're looking at EM, I know all those things. One thing that stuck out for me, though, Kathy, even though you've become more constructive on the economy, you are not taking on more risk. You are not going into the depths of high yield. Why not?
I think that play is over. That was the beginning of the recovery play. When we look at the lower tranches, the lower tiers of high yield, say triple Cs, just don't see much upside potential. The prices rally, the yields come down. There's still going to be some bankruptcies and defaults. The default rate's probably, the recovery rate after default is probably going to be low. Maybe there's some workouts in the private debt sector, but it still is not going to help the bond holders in those lower tranches. So I think that play has run its course, and we want to stay in double Bs or better.
You have been reluctant to ride that wave through most of this year. Kathy, it's fantastic to catch up with you, as always. And Kathy, thank you for your contribution to this program through the year. Have a wonderful Christmas with the family. Kathy Jones there of Charles Schwab.
Thank you.
Coming up, the analyst action you need to know. That'll be next in our morning calls. Then later, Lisa Shallard of Morgan Stanley joining us around the opening bell. Lisa Shallard and the team at Morgan Stanley getting this snapback in this market just spot on through most of the back end of 2020. Looking forward to that conversation just around the corner. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Record high on the S&P 500 yesterday. You might have another record high on the S&P at the opening bell, up 0.2%. We advanced 6-7 points on S&P 500 futures. Here are the morning calls. Bank of America hitting Discovery with a double downgrade, cutting the stock to underperform with a $25 price target. The analyst raising its concerns about the company's shift to streaming video in the face of heated competition. Your second call from Credit Suisse, cutting Planeteer to underperform, but raising its price target to 17. The analyst saying the stock is well ahead of itself after a 275% plus rally since the share started trading in September. And finally, Susquehanna raising its price target on Lennar to 109 from 94. The analyst cited the company's guidance and a strong demand environment as reason for optimism. That stock up by 0.7%. Up next, Wall Street getting bullish going into the new year, but Morgan Stanley's Lisa Shallett signaling a bit of caution. That's next. This is Bloomberg.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Winding down the final full trading week of the year. It's emotional, isn't it? Can you hear the enthusiasm, the clapping? I can't either, really. Equities up 5 points to the S&P, up a little more than 1/10%. Clapping's a little bit louder. There we go. There's your opening bow. The sound of capitalism is beautiful, isn't it? The Russell up 0.2%. 7 weeks of gains on small caps in America. Unreal. Switch up the board into the bond market. Yields look like this on treasuries. Your 10-year coming in a basis point, 0.9246%. In foreign exchange, euro dollar took a little look at new highs for 2020, back down to 122.50 and down about 1/10%. And crude, what a year it's been for crude. Abigail Doolittle on top of this over the last several months. WTI, $48 and about 80 cents. We're up 0.8%. At the market desk with your movers, here is Abigail.
Good morning to you, John. And with stocks barely moving here on the open, let's lift the lid and take a look at what's happening beneath the surface. And that, of course, starts out with the shares of Moderna. They are down once again, now down 4 out of the last 5 days. Right now, headed to the worst week since July. This, of course, as it seems very likely that this company's COVID-19 virus is likely to be approved for distribution, perhaps as soon as today. Earlier, as Kayleigh was mentioning, President Trump tweeted that it has been approved. That is not, in fact, yet the case, but the expectation is that will happen. So it seems we have some sell the news action there for Moderna. Now, FedEx is also lower. This, of course, after their ground unit margins are down, costs are higher, valuation rich, investors selling that stock. On the other hand, you have Macy's and Kohl's both higher as Jefferies gets positive on these department stores, raising their rating to a buy on Macy's, seeing more than 30% upside, saying that both Macy's and Kohl's are positioned for the post-COVID environment. As for some of the recent IPOs you were mentioning earlier today, John, that Palantir has been cut to and underperformed by Credit Suisse. We see weakness there, dragging both on Rocket and DoorDash on that downgrade. And of course, yesterday, Citron Research was pretty bearish on DoorDash, saying that it's one of the more ridiculous IPOs this year. On the other hand, you have Susquehanna positive today on DoorDash and Airbnb. Airbnb showing that with their street high price target of $180. Susquehanna saying Airbnb is a clear leader in the short-term rental market. Airbnb sharply higher this morning, John.
There have been a lot of ridiculous IPOs this year. Abigail, thank you. Thank you very much. 2 minutes into the session, we came into Friday, record high, record high, record high. On the S&P, the NASDAQ, the Russell, we add some weight to those record highs, just a little bit. On the S&P, your new all-time high on the S&P 500 is 3726.70. There we are, pretty much unchanged on the session. The economy is not doing as well as the S&P 500 sitting at a record high. The data continues to weaken, the cracks between the market and the economy widening. Mohammed Al-Arian of Queen's College telling investors to be more opportunistic despite broken fundamentals.
You always want to have what I call a structural layer, things that make sense over time because you're exploiting structural mispricing. You also want to have a secular layer. You are positioning for long-term trends. But there's a third level, which is the technical side, the ability to be a lot more opportunistic. And what this year has taught me, certainly, is be more opportunistic and pay attention.
For more, let's bring in Bloomberg's Kayleigh Lyons. Hi, Kayleigh.
Hey, John. Well, this market has been living far into the future for some time now, and it has reproven that this week. Yesterday, the S&P 500, the NASDAQ, and the small-cap Russell 2000 notching record highs, even after a disappointing more-than-expected 885,000 print on initial jobless claims. That followed on Wednesday, record highs again, even though we saw disappointing retail sales data. The data is revealing weakness in the real economy, but the equity market just keeps marching on, John. And to underscore that, I have a really remarkable chart I can show you, really quite mind-boggling. It compares the market cap of the S&P 500 to the U.S. gross domestic product. The S&P market cap at this point, around $32 trillion. U.S. GDP, just above $20 trillion. That makes the market value of the S&P 500 131% of the size of the U.S. economy, well ahead of the level we saw in the dot-com bubble, John. I was talking to Steve Whiting, the chief economist over at Citi Private Bank yesterday, and I asked him why this is, why the market is so willing to look through near-term weakness. And he basically said it makes it more likely fiscal aid will come and provide a bridge. He also pointed to the rollout of vaccine and said that's going to get us through. Basically, that this market is looking forward, as we know the market does. And when it does look forward, it also sees expectations for earnings to rebound next year. And while that rebound will be large compared to this year, if we consider this year a lost one for corporate profits and compare it instead to 2019, it's only a 2% gain in earnings. The question now, John, is that does that justify a 15% jump in equities this year, John?
But earnings will get so much better. Kelly, you know the story. We just push out the good stuff into the back end of next year, and then if we don't get it, we'll push it out again. It will come a year after that. The S&P this morning, a new record, another all-time high. Investors doubling down on the bullish narrative into the new year.
Bullish sentiment has surged in the American Association of Individual Investors.
Equity markets are very forward-looking.
An unrelenting kind of bullish equity market run.
Not max euphoric, not max bullish, but certainly, on their way there.
Room for a little bit further optimism.
The backdrop is extremely positive.
Over the course of 21, where we move from this, hey, things are, sort of looking really bad.
Public health is deteriorating, as you pointed out. Policy is not doing anything. The economy is slowing.
To, hey, actually, things are looking pretty good.
If we look beyond this towards next year, this is all these risks fade away.
Morgan Stanley's Lisa Shallett seeing fiscal and monetary policy at max accommodation, signalling caution over already priced in aggressive expectations. Lisa joins us now over the phone. Lisa, brilliant to catch up with you. When you get cautious, I listen that little bit more carefully because you've been so constructive through 2020, especially when others weren't. Why now, Lisa?
Well, look, our perspective is that, markets climb a wall of worry, and we've now priced in, I believe, an extraordinary amount of good news. We've priced in another round of fiscal stimulus. We've priced in a gridlocked government under a new Biden administration. We've priced in, the vaccine, and we've priced in this big rebound in the middle to end of next year where, there's pent-up demand for services, the economy reopens, everyone's, traveling and going on vacation and eating in restaurants again. And quite frankly, consensus expectations have already, priced kind of a 25% year-over-year growth in corporate profits. And so a lot has happened, a lot's been priced here. And so one of the things that we're just beginning to say to folks is, what is that next big positive catalyst? Or more precisely, what is the big worry that's going to weigh on markets that we can get an upside surprise on that will be a positive catalyst? And right now, we think that this is a market that's really running on fumes, meaning flows. It's running on cash chasing and coming in off the sidelines, and all the hedge fund managers unwinding their shorts before the end of the year. And, those are the kind of things that can just stop on a dime when the money runs out. So we're cautious here.
Typically, Lisa, if you expect turbulence, the cautiousness nature that you're taking and displaying right now, you put on a tin hat and you buy some treasuries. Lisa, you can't do that anymore. You might be able to put on the tin hat, but buying some treasuries might not be the option in the same way. Maybe yields don't drop in the same way. We've questioned that many times over the last several months. What do you do now, Lisa, into 21? If you are cautious, at least in the near term, perhaps out several months, how do you position for that?
Yeah, so that's a fantastic question, and it's the question that all of our, clients are struggling with. And so, where we've been focused in the short term is cash and gold, quite frankly. Treasuries are probably, to your point, not the answer. And so maybe you can own some ultra-short duration here and things like cash. But gold would be some of the things that we're buying right now when there's all this euphoria. The other thing that I would say is, quite frankly, options and buying some protection in the market is something else that for clients who can do that, we're talking about.
Lisa, for someone that's had such a wonderful year off the bottom, what funds that cash position? What are you trimming? What are you selling? Is this a broad de-risking or de-risking in certain areas of the market?
So we continue to just take profits in what have been the highest flying growth stocks, the long duration assets, those mega cap secular growers. Obviously, some of the recent IPO candidates. We've tried to encourage clients who have had exposure not to be overzealous and greedy, quite frankly, and take some chips and really try to redistribute it to areas of the market that have more value and quality support. We're still finding a little bit of that in financials, a little bit of that in some of the consumer discretionary, some of the material stocks, some of the energy stocks. But there's not a lot that is super exciting in the U.S. market. And so, we're also encouraging folks to maybe look outside the U.S. where valuations are not kind of in a, 100th percentile of history.
Lisa, we've got to leave it there, but thank you. Thank you for today, and thank you for everything this year as well. My best to you and the team, and just absolutely brilliant coming off the lows to have that confidence to be constructive on the economy and the rebound when others just really weren't. Lisa Shallett, of Morgan Stanley. Let's get back to the market desk, get on top of the movers. Here's Abigail.
John, let's take a look at two of the best stocks for the S&P 500 and two of the worst stocks. Starting out with the best, we're taking a look at Oracle. Shares are popping higher. Earlier, of course, this week, they put up a very strong quarter, beating estimates. And today, we have Monness Crespi upgrading their rating on the stock to a buy, saying it's a very strong value play, a high-quality value play. They have an $82 price target, suggesting solid upside is ahead. Dow is also popping, this on an upgrade at JP Morgan to an overweight with a $60 price target. On the other hand, we have both Discovery and Viacom down. This is Bank of America has cut these two companies along with iHeart to underperform, saying that these companies are making a very risky shift to streaming and that the fundamentals are challenging in the near term. Not challenged in the near term, John, is Tesla. This stock is absolutely on fire this year. The best stock for the NASDAQ 100 this year, up well more than 600%. Today, up 4%. And of course, on Monday, John, it is the big day. Tesla will be added to the S&P 500. Many strategists saying that this will bring big volatility and valuation, frankly, to the S&P 500. Others saying it could be a sell the news moment for Tesla. Monday should be an interesting trading day for Tesla, John.
We will find out. Abigail, thank you. Still sitting here processing a more cautious Lisa Shallett of Morgan Stanley. Where are the sources of upside surprises going to come from, given what we've just priced in? We pull back on the S&P 500, down about 0.1% of the S&P after printing a new all-time high. Coming up, tension between the United States and China building into the new year. That conversation up next with Steve Englander of Standard Chartered. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
the directional journey and the medium-term trend is that the two economic superpowers will continue to diverge and decouple, and we have seen some specific examples of that, and technology sector is going to be important in that regard. So from a macro perspective, I guess the risks have come down, but from a sector and single name perspective, I think the risks are still alive and probably may continue going forward.
The United States and China are making those concerns a reality as the Commerce Department announces it's blacklisting more than 60 Chinese firms, including chipmaker SMIC. In order to protect national security, the Chinese Foreign Ministry warning the United States it will take necessary measures to protect their rights. For more, let's bring in Bloomberg's international economics and policy correspondent, Mike McKee. Morning, Mike.
Good morning, John. Well, it's called the entities list. Companies who want to sell to these companies on the list have to get a license to do so, which is by definition hard or very much impossible to get. The access is then denied to U.S. technology, from semiconductors to circuits. The Trump administration using this as a weapon in its trade war with China. Today, they added Semiconductor Manufacturing International, that's China's biggest chip maker, to the list, along with dozens of other Chinese companies. In a statement, they say they're being added to the list for actions deemed contrary to the national security or foreign policy interest of the United States. Shanghai-based SMIC is a supplier to Qualcomm and Broadcom, and the U.S. says also to the Chinese Army. The company denies it. But the administration, and to be fair, many in Washington, think that, from both parties, think that China's ambitions to dominate spheres of technology are a geopolitical threat. China planning to provide broad support for its chip makers to make so-called third-generation semiconductors in its 5-year plan to be able to be self-sufficient in the technology area. So blacklisting the companies makes it that much harder for them to do so. SMIC expected to play a central role in the Chinese efforts to dominate the technology semiconductor industry, and the U.S. now determined to stop it. It joins Huawei on the entities list and the other companies who can get on the list for a host of reasons. They enable human rights abuses, they support China's militarization of the South China Sea, support for the People's Liberation Army, and stealing U.S. trade secrets. Now, obviously, the Trump administration is leaving office in about 6 weeks. It'll be up to the Biden administration to decide whether to follow through on these designations.
Mike, thank you. Michael McKee there on the latest between the United States and China. Steve Englander of Standard Chartered saying the impact on the dollar will be limited for now, but expecting spats between the two countries to matter a whole lot more when the new administration takes office. Steve joins us now. Steve, let's start there, sir. Why a whole lot more in the future once the new administration comes through?
Well, look, there's uncertainty as to, what the motivation is for the Trump administration to do this right now, whether it's genuine national security concerns or whether it's setting political landmines for the Biden administration, recognizing that trade with China is politically unpopular at the U.S. at the moment, and so if Biden wants to kind of ease up, he will have to do it publicly, and it would be politically embarrassing.
I was going through some of your top risks over at Standard Chartered, Steve, and I just wanted to jump in with this because one of your top risks for next year, number 2, the United States and China find common ground. Clearly not your base case, Steve, but how does this one go right?
Well, I think both sides would like to have a bit of a timeout. After the last tumultuous 3 years of trade encounters and geopolitical and face-offs on the political side, I think the Biden administration would like a bit of time to figure out what engagement with China is appropriate, what issues are fundamental and that they're really going to have to face off against them. Similarly, China, look, they want to develop their domestic economy. They have, ambitions on technology. The trade war has been a distraction that they haven't welcomed, and they probably would like to have a bit of time in which relations were calmer.
The US dollar in all of this, Steve, pretty clear read across as to what might happen with the global economy, the relationships between the two countries. If it goes right, weaker dollar, mainly driven by risk appetite. Steve, one of the takeaways, though, for 2020 has to be dollar dominance. It had its test. and it passed with flying colors, didn't it, Steve?
Well, I think that's an issue for much of the world, right? That right now, a weak dollar is good for the world. It's excellent for the world because it eases funding conditions in emerging markets. It's the best foreign aid policy you can imagine. I think that on a trading basis, the dollar's importance is probably falling. It's not falling as far as financial markets are. But I think, if you are China, you want to be somewhat independent of the USD payment system. You want to develop your own sort of financial markets. But it is the case that if there is a crisis, people will buy dollars because so much is funded in dollars. Right now, there's no way of avoiding that.
Just a final question for me, Steve, on the US dollar. The dollar bottomed in the spring of 2018 after a year of synchronized global growth. The dollar index now is basically exactly where it was back then. How do we get that next leg lower?
Well, look, I think there's more to come, and I think that the Fed Chair Powell sort of was indicating that they're going to be expanding the balance sheet. Long-term rates will be low. We don't think it's over yet. We think that it's going to, this may be the start of a multi-year dollar weakness is the risk. It would take a lot of good news to get U.S. real interest rates anywhere close to where they were before the COVID crisis. And until we get there, U.S. demand is strong, U.S. real interest rates are weak. It's kind of a formula for a weaker dollar.
Steve, great to catch up. My best to you and yours. Enjoy the holiday, sir. And thank you for everything. Steve Englander there on the latest from Standard Chartered. You too. Let's get some sector price action quickly. Here's Abigail.
John, well, on the day, not much happening. I know you're not supposed to say that, but sometimes that is information, and that happens to be the case right now. Most sectors are lower, but not by much, led by energy. On the other hand, you have two sectors ever so slightly higher. On the week, though, it is very, very interesting because up top we have tech and we also have consumer discretionary. That tells you this year's defense is leading on the week, while energy and the industrials, the cyclical sectors on this week are down. So a little bit of a reversal on the week from what people would like to see, John.
Abigail, thank you. Up next on the show, we'll run you through the weekend's events and the events of next week in your trading diary.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
25 minutes into the session, equities just off all-time highs on the S&P. We retreat by about a third of 1%. Let's get to the trading diary. At the top of the hour, we hear from the Senate and potentially get an update on stimulus. House Speaker Nancy Pelosi holding her weekly news conference at 10:45 Eastern. Tesla joining the S&P 500 on Monday. U.S. third-quarter GDP due out on Tuesday. On Thursday, a slew of U.S. economic data, including claims, durable goods, and personal income and spending. And on Friday, the market's closed for Christmas. I will be away next week. Thank you very much for your support this year. Thank you for choosing to spend your time with us. I know it's been very, very hard for everyone worldwide and much harder for others still. Now, as markets look forward to the back end of 2021, where all things are great, let's not move on too quickly and remember those still working hard at the front lines of a crisis we've still not got through. From New York and London, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry citizens?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you, millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.